There are literally thousands of technical tools used in active trading. Among the most versatile and effective are Fibonacci retracements. Now, Fibonacci retracements are the backbone of the golden zone strategy. Fibonacci retracement levels are used to trade pullbacks and price action. The golden zone takes this functionality to the next level. In this video, we're going to teach you how to trade the Fibonacci golden zone strategy in real time. All right, let's get to it. Fibonacci retracements are used to locate support and resistance levels on the price chart. For pullback trading strategies, these levels are used to buy support and sell resistance. By doing so, traders can join prevailing price action. Now, the Fibonacci golden zone is a distinct technical area defined by Fibonacci retracement levels. It is located between the 50% and 61.8% retracement levels. The golden zone may be either support or resistance. Here's an example of the golden zone as support. You'll notice that the zone resides beneath price action. Here's an example of the golden zone as resistance. You'll notice here that the golden zone is located above prevailing price action. Now, the golden zone may be used to buy or sell the market, and it works best with confirmation. More on that in a minute. Before we trade the golden zone, we have to know how to add the Fibonacci retracement tool to our charts. Here's how to add Fibonacci's on TradingView and MT5. First, TradingView. Here's our Fibonacci icon over in our left-handed column. Let's go ahead, give that a click. We're going to go to our desired swing high in this case. We're going to go ahead and click and release. Now we're going to move down to our swing low, and we're going to click one more time. Now our Fibonacci sequence is set on TradingView. Now MT5 is a bit different. There's our Fibonacci icon up in the upper toolbar. Go ahead and give that a click. Go to our desired top in this case. We're going to go ahead and click. Now you must click and hold on MT5, and then we're going to go ahead and drag down to the bottom of our range and now release, and our Fibonacci's are set. So that's how to add Fibonacci tool on TradingView and MT5. Now, when drawing Fibonacci retracements, it's critical that the correct set of high and low price points are selected. This is the basis of your sequence. Now, there are many ways to do this, including the most recent swing highs or swing lows, aggregate swing highs and swing lows, or time-based ranges. All right, let's draw a few and show you what I mean. Let's go right here to a current spike to spike. There's a nice swing high and there's a nice swing low, and you'll notice that gives us our golden zone right between 50 and 62%. Let's say I wanted to do the entire market structure, right from this upper extreme to this lower extreme. I can certainly do that as well. The key is just to be consistent. Now, time-based ranges are a bit trickier. You'll notice that we can do those on daily, weekly, monthly, or yearly ranges. Also, we can do those on individual sessions. So this right here is a good example of your London session. You'll notice right there, that's the beginning, that's the opening bell in London, and then you're looking at really getting that nice big move through the London close, a little bit of that New York overlap as well, and our golden zone sets up nicely right there where it needs to be with respect to our session. Now, there's a few other ways that we need to really think about golden zones. We need to think about, number one, a bullish golden zone and a bearish golden zone. Our bullish golden zone is located beneath price action. It's an entry to buy. It's a signal to buy the market. You'll notice right there, good look at a bullish golden zone. Nice big rally. Price is up here. That's an opportunity for us to buy. Now, we also have a bearish golden zone. Now, this is located above price action. It's a sell entry. Right there's your bearish golden zone. A nice big market plunge. We're down here. Price is sort of milling around. If it comes up and gives us a shot to sell in our golden zone, then we can jump all over it. So that's the key thing to remember. Always be consistent with drawing your Fibonacci retracement sequences, and the golden zone is between 50 and 61.8%. It can be bullish or bearish. The golden zone strategy works best with other indicators or chart patterns. This is known as confirmation. Now, think of confirmation as additional evidence that a buy or a sell is justified. This evidence may be derived from any technical or fundamental device that you want. It's completely up to you. Now, here's an example of confirmation using an inverted hammer candlestick pattern. Now, as you can see, the golden zone is located beneath price, so we're looking to buy the market. Now our inverted hammer comes into play. That gives us a little bit extra confidence that we should buy the market. So let's go ahead and buy. We've got confirmation, and let's roll forward in time and really have a look at what happens. And of course, we get our nice big bullish move. All right, you know how to locate the golden zone and establish confirmation. It's time for us to put it all together. Here's an example of how to trade the golden zone strategy with confirmation. Now remember, when we wait for confirmation, it's a safer way to trade. It just takes a little bit more patience. So the first thing we do is identify our range. We notice we're in sort of a uptrend here on the gold 30-minute chart. We've got a nice swing low here. We got a nice upper extreme here. So that's the range that we want to target. The next thing we do is draw our Fibonacci's. There's our 100 level, and then there's our 0 level. So our Fibonacci's are drawn. Our golden zone is identified. Now we have to wait for confirmation. So let's go ahead with our replay function and roll forward in time. You'll notice the price is sort of meandering towards our golden zone. You can see we've sort of got a test right here, but we don't have a hammer formation, so we have to wait. We're still waiting for our hammer from our golden zone. Do we get an opportunity maybe to trade? And there it is. Our hammer sets up nicely, a nice test of the golden zone, and there's our hammer candlestick. The next thing we do is enter our stop loss. Fairly standard. I want to put that just beneath my golden zone. I want to make sure that I shade that a few pips. In this case, let's shade it, I don't know, 50 pips or so. We'll take this down and give this zone every opportunity to be successful. Now, what do I want to do with my profit target? Well, I could do a number of different things. I could put it at a static risk versus reward, or I could shoot for the top of market structure, or I could just put it at a big round number. Maybe that I want to shoot for 23.30 or 23.32 or 34. Let's go ahead and put this profit target right up there. Let's say 33.87, sort of maybe a 1.5 to 1, somewhere in that with a risk versus reward. Now, we got to buy the market. We're long on our hammer formation. Let's go ahead and roll forward in time and see how this trade pans out. We've got our confirmation. We've got our golden zone. We're looking to get a little bit of bullish price action and potentially make a profit on this trade. And there it is. We got a nice big break. There's our hammer formation. Sort of suggests that our bullish trend is going to continue. And we had a real nice move up towards our take profit. So that's a good look at how to trade the golden zone with confirmation. To execute a sell, it would be exactly the same, except in that instance, the golden zone is going to be resistance, and you're going to step up and sell after you receive some sort of confirmation. Okay, here we're going to execute a golden zone trade without any confirmation. This is a more aggressive way to trade the golden zone strategy, but it's still very possible. First thing we're going to do is identify our range. You notice we have a nice swing high here. We sort of have a spike low developing, so that's going to be the range that we're going to target. The second thing we're going to do is draw our Fibonacci's. We're going to go right up here to our swing high and then right to our swing low, and there's our golden zone. Now, we're going to buy or sell on the first test of this golden zone. In this case, this is a downward move in price. We're going to look to sell that as topside resistance. We're going to execute our stop loss right above our golden zone in this case. So if price goes up and hits our stop loss, we're going to be out. Remember, we don't want to be around in the midst of a bullish break. It's important that you trade these relatively tight if you're not waiting for confirmation. And then the last thing would be your profit target. This could either be a risk versus reward or a function of market structure or a key number. Let's go ahead and just aim for maybe 66 and a quarter here on this Aussie USD trade, a little bit beneath our market structure here, perhaps get in on a bit of a new trend. Okay, let's go ahead and roll forward in time and see exactly what happens. You can see we got a nice test on this 4-hour chart. We got a nice test of our golden zone. We're short. We're waiting either for our profit target or stop loss to be hit. And I think we're in a pretty darn good trade. So here we go. And right there, we've hit our profit target. Really a fantastic way to trade. It's more aggressive, trading the golden zone without confirmation, but it can be done. Fibonacci retracements are powerful tools for active traders. They offer us precise entry and exit points, and they give us valuable insight into a market's psychology. Best of all, they work. The golden zone strategy is simple. Find your range, draw your retracements, and then trade the zone. Stick to a solid risk management plan, and you're ready to generate consistent profits in no time at all. Now, for more strategies like the Fibonacci Golden Zone, subscribe to this channel. That's it for now. All right, let's trade the zone.